Saw the euro breaking above the key resistance levels today of 138.62. It's the highest level that we saw since November. Growing expectations that the eurozone could come in and hike interest rates. What exactly is happening with that cross? And again, it's really got to do with this whole talk of possible monetary policy tightening.
I think that that's the global feel at the moment. You're seeing likes of the hawks coming out of the US speaking about interest rates being hiked, certainly out of the ECB now. This inflationary picture is really creating a lot of dilemma with regards to the global backdrop. I mean, we're in a situation whereby there isn't really that sustainable growth right now. There isn't that consumer-led growth, yet we've got these exogenous factors that are impacting potentially what the inflation picture looks like. And unfortunately, that's creating a massive, massive dilemma. Should we hike? Should we not hike? Is this a scenario that is going to potentially slow down the consumer and slow down global growth? Or do we put that on the back burner for now, allow these things to kind of, these exogenous factors like the oil price that we're seeing come through, the food prices that we're seeing coming through? Are central banks going to be prepared to put those on the sideline and allow interest rates to remain flexible for the foreseeable future? At this point in time, it looks as though that's the case. And I mean, we're seeing that a lot of markets are being driven about interest rates views, but the bigger picture is that going to stop growth?
Well, let's zoom into some of the commentary made by Fed Chairman Ben Bernanke. We know he's set to continue his testimony to Congress today, talking about the fact that deflation risks have now receded. He also says that the high oil price hasn't hurt the US economy so far, but it is going to be a concern going forward if it is sustained at these levels. So it seems that it is quite a big play between whether to keep stimulus going, the inflation outlook as well. And then on the other end, you've got someone like Warren Buffett saying that the stimulus that we see in the US is not really warranted and not really needed. Brigid, what are you making of all this commentary, and what do you think the right thing to do is right now?
I can't believe you're asking me that, seriously. I think that at the moment, look, there's a lot of dilemma, specifically around the fact that there's a lot of stimulus in the system. The stimulus is driving global markets. It's driven equity prices. It's driven commodity prices, etc. So I think a lot of investors now are sitting on the sidelines and looking at where to from here. Because ultimately, at some point, this is going to have to be pulled back. What the actual outcome is, I certainly don't know. I would hate to be a central banker right now.
I'm sure you played out those scenarios. This is why I'm asking you, Brigid. I know you're a scenario planner at night. Brigid, let's just move on to the likes of the European Union, the Eurozone, and what you perhaps think the next move will be going forward. I mean, clearly we've got inflation above the target range. That's the situation we're dealing with in the UK as well. Do you think that they are in a position to say, well, let's hike rates to try and tame inflation, or do you think that it's manageable at these levels?
Well, look, I think at the moment they're in the situation whereby you're finding a lot of similar developed nations. You're seeing the US, you're certainly seeing the UK in the same scenario, running quite high inflation expectations, but wanting to get economies online. There's a lot of austerity that still has to feed through the system. What I did like today was there were some comments made by the German Chancellor, making comments to support the Eurozone. They are continuing to say that they want to support the zone. They continue to support the Euro. There will be more clarification around the bailout packages, etc. And I think that creates some calm in that scenario. So what you're starting to see is a more confident investor in the Eurozone, specifically because at some point they will look to hike interest rates, and potentially that may be pushed slightly forward of what initially was expected. But I still like interest rates flat for the foreseeable future.
So Brigid, we're seeing risk off when it comes to equities, it seems, but definitely risk on when it comes to the local currency. We're sitting at 6.86. How much longer can the rand sustain these levels? And we saw broad-based strength coming through for the local currency. Are we just merely tracking the euro right now?
Well, we've certainly seen a lot of strength come through because we saw strength in the euro, being one of our trading partners. I think that what's also driving the local markets is the attraction of the fact that we still happen to have an attractive yield. You know, we saw quite a lot of bond buying today, specifically in the longer dated bonds. Right through the curve, in fact, we saw a good interest to buy. And I think that will continue. I think that what you must also keep in mind is that we've seen artificial weakening of the rand over the last 2 months, which is starting to feed back through as that has abated. So you're seeing rand now trading below that 7 level, trading closer towards 690, and potentially we could see a trade as low as 680 within the next week or two.
Should we be reading a lot into the likes of the dollar coming under pressure? It is unemployment week. This week we had ADP figures coming to the fore showing that the private sector added 217,000 jobs in February. Brigid, we know we do usually see dollar volatility over these days.
I think that the non-farm payroll figure on Friday is very, very vital for the markets. A lot of people are going to be watching that. ADP was fantastic today, and it was great to see a very positive number. And I think we really need to start seeing more and more of the job creation kind of numbers that start feeding through, because those will help to elevate the issues that we're finding within that consumer growth scenario that really are the underlying core fundamentals that we need to start seeing feed through. So that will be very positive. I think we potentially, hopefully, will be upside surprised on Friday at the non-farm payrolls.
Let's look at the week ahead just very quickly when it comes to the local currency. Do you think that there is a chance we could breach that key 7 rand to the dollar level? And if we do, does that perhaps signal the fact that we could see a reversal in the trend that we've been seeing over the last few days? In other words, rand strength.
Eleni, I think we are seeing a reversal of the trend as we speak. I think that we've seen a break below the 7 level. We're currently trading closer to 690. Still seeing good interest to sell dollars into the rand and looking to buy rand. So exporters' interest, and it's overpowering and outweighing any interest to buy dollars. So it seems to be that the trend now is towards 690. Probably find some support around those levels, and then potentially, possibly, should all things being equal, trade closer to 680, judging by the technicals.